Traders, I'm going to share with you my trend continuation, my trend trading strategy in this video. I'm always starting from the daily time frame. We're going to look at this trend from way back down in here. And the first thing that I'll do is I'll mark up on the left over here potential targets, and they're going to be wherever you see a swing. So we've got this double top high. The candle bodies will be a target. In this case, we're bullish. So I want to see this trending fairly convincingly, in other words, at a 45-degree angle. And then I'm going to be looking for the pullbacks and retraces. But what I'll do in the video is I'll share with you what I'm looking for, but I'm also going to share with you my entry criteria, and that'll be on maybe a 15 or even a 5-minute chart. So we mark up these highs, and the reason being is traders shorted this. This is a significant level. You can see with this red candle how significant this level was. So we can assume that there's resting stops above this level. We're going to be targeting that. So as this is trending bullish, it's going to be looking for the liquidity above these levels. So I'm going to mark up these highs as a point of interest for potential targets moving forward. We've got this candle swing high. I'm going to look at the candle body, and that will be the level that I'm interested in. This one here, have a look left and we can see this is a significant candle beside it. We've got a bit of a double top. In this case, this swing here, I will take this candle high as a target. Over here we've got these swings. There's a target, and these highs here will take these candle body high here as a target. So now we've got a bit of a roadmap on the daily time frame. Coming down to the 4H next, I'm going to be looking for trend movement. Not so up here. I mean, we kind of got, yeah, we got a couple of opportunities up in here, but down in here, this is where it's relatively easy to get involved. I pointed this out in a previous video where you see a trend. We're looking for, in this case, higher highs and higher lows. The previous high becomes support, and this then is our potential entry point, 1 to 2 risk reward. By default, previous high becomes support, pull back down into it, and we look at an entry opportunity at that level. I want to see the trend heading in this direction. In other words, these higher highs, higher lows, definitely at about a 45-degree angle. So that's established. Then on the 4H, we can pick up our path tool here, and we're going to look at the lows, the high, a low, a swing high, a swing low, swing high. So it's really quite simple. We're just marking up these swings. This one was a little bit lower, and that actually happens fairly often where you'll see you'll get 2 or 3 nice pullbacks, into an optimal entry, but 3, 4, or 5 retraces along, you're going to get this deeper pullback as they hunt stops under these levels prior to a move like that. So you might want to be careful, because that can potentially catch you out. Anyway, I'll leave it at that for now, and then we'll look at these levels here. On the 4H, it's the same thing. I'm looking for the fib retrace. So if we pick up our Fibonacci, low to high, this blue zone in here is my entry. So then we enter. If you're not in front of the charts, I would just go with the 61.8, look at the previous low for a stop, 1 to 2 risk reward by default. That's about it there. And we rinse and repeat. So you can see that when it's trending, it'll generally keep you out of trouble with the stop loss below the previous low. Generally, it won't break the previous low until here. So depending on where your stop loss was, that could have taken you out. But we're going to look at this a bit more in detail on the lower time frame, this point of interest here. I'm going to mark it up, and I'll show you how to avoid getting taken out with a move like this. In fact, we'll just grab this low here, and we're going to have a look at both of these levels on the lower time frame. Of course, at some stage, this will do its thing and it'll retrace, all right? And you may get taken out on the last move. However, when you're considering a 1 to 2 risk reward goal, you've got one, two, three, 4, 5, 6, 7, possibly seven trades in here that are profitable, with one that gets taken out. Now you only need a 34% win rate with a 1 to 2 risk rewards. That will put you into slightly in the money if that's the case. However, in saying that, you should be achieving, say, 50, maybe 60%. Even if you come back with a 40% win rate, you'll be in front if you can stick to the 1 to 2 risk reward strategy. Now, with that in mind, what we're going to do now is we're going to go down to the lower time frame. We're going to have a look at these. We'll actually start with the 1H, and then I want to go down to the 15 or the 5. Now, this strategy is great when you're not in front of the charts. You've seen the swing, and you set your limit order at the 61.8 fib zone, set and forget, and walk away. Now, if you're in front of the charts, well, I'll just go to the hourly first, and we'll have a look at that, and then we'll go down, and I'll show you what to look for in this situation, because the fib pullback here, for example, if we grab the fib from low to high, fib pullback, long position, was here. Now, if you're not in front of the charts, all right, you can set a buy stop loss below the previous. Now, you may or may not have been taken out here, but if you're in front of the charts, this is what you're going to be looking for, and we're going to get really close to this. In fact, we'll have a look at both of these. So we'll go down to even a 5-minute chart. I'll even trade this on the 3-minute. You know, if I'm in front of the charts and I'm looking for an optimal entry, have a look at this one here. This one played out perfectly well. The thing that you're looking for is this. Here's a trend, and what we get here is this base. We've got a double bottom. It sweeps down below. That's a liquidity sweep, and then it trends off. But the way to avoid getting messed up here is, well, I mean, this one worked out quite nicely with the limit buy, but what you want to do here is you want to wait for this to set up, and the way to read this is mark up these highs here, and when this previous high is taken out, we have a break of structure right here. So you're going to be looking for an entry. Now this is trending, and this is a lower time frame. You'll be pulling your fib from these levels. Okay, we've got a low here. We have a swing high here, and we pull a Fibonacci from this low to high, and we look for an entry. 50 to 618. Look, just between you and I generally go in slightly after the 50, so you may or may not have actually gotten in there. Never mind. Wait for the next pullback. Swing low, swing high, and that's your entry point right here. Okay, so you want to wait for this break of market structure. So this is trending down, and then the previous high gets taken out. That got taken out here. A bit of a shift in structure, or a bit of a change in character. Deeper sweep down in here, but yeah, I mean, this is it here. That's your signal for an entry, and then you look for an optimal entry from that point on. Now, have a look at this other one. This was your 61.8 right here, and of course it blew through that. Now, you could have set that up with a limit, and you may or may not have gotten taken out, as this spiked right down to this low and a little bit beyond. Now that's a liquidity sweep, but again, to avoid that, you're waiting for higher highs and higher lows to set up. You want the break of structure, and it's a really simple matter of marking up these highs here, and you want to see this previous high as this is trending down. So you've got your trend, lower lows, lower highs. You can see that quite clearly here, but this break here, this previous high, is what we're looking for. That's your break of structure right there at that point. And then your entry, well, if you caught it, would be this pullback here. I don't know if you would have got that. Pull it from low to high. Yeah, it was only a shallow pullback, right? So, I mean, every now and again, you'll miss an opportunity, and I mean, that's okay. But at least, you know, that gives you a bit of an idea of what to look for. You want the break of these highs, and then it starts trending. And I mean, you can see that here. So that's just getting a little bit more technical. The easiest way out, if you're not in front of the charts, obviously, is to set your limit orders, and your win rate should be reasonable. That more or less sums up the video on the trend continuation strategy. I think I'll wrap it up at that. So with that, hope you have a great day. Safe trading. Leave a comment. Love to hear your thoughts, and we'll see you in the next video.